Okay. What's going on, everybody? In this video, we are going to go through three things: my quant tower template and my indicators that I use, the settings on those. We're going to go through the weekly profile with the volume profile of November 17th through the 21st. And we're going to go through the best trades, the best practices, the best way to find key levels. And then at the end, I will also give my quant tower settings, because if you don't have deep charts, you can still find a lot of very good resources and tools to help you trade order flow very well through quant tower. But I think watching deep charts, you guys are going to be pretty excited about it. The reason I wanted to make this video is a lot of my videos so far have been more short form, something that you can easily watch and apply. But I've been getting a lot of questions about my full approach, my strategy, my entry model, all the above. And if I wanted to make my full breakdown in one video, it would be probably 6 hours long. So this is going to be a little mini part series. Today, we're going to focus mainly on location. So finding the areas that the market's going to be drawn to, that the market's going to trade from. I know it's a joke in the order flow community to say, oh, well, order flow traders just mark a line on a chart and then they just trade from it. As funny as that is, if you're a good order flow trader, there is a little bit of truth to it. But obviously, we don't just blindly enter. I don't set limits. I wait for the market to reach my level. And then once it reaches that level, I can see who's winning, who's fighting between buyers and sellers, and whoever wins that fight, okay, now I can get in. So we're going to do a weekly profile. We're going to have a daily profile and then adjust the weekly profile as time goes on. And you're just going to see throughout the week how often the market comes to these levels that we're going to focus on. And I'm not cherry picking this week. This happens. This is how the market moves. And I know I'm going to show you the best trades, and obviously it's hindsight, and you're going to say, yeah, well, it's easy to see in real time or after the fact, but you're still going to see that it was drawn to these levels. And also, it's not like I'm showing you trades that I didn't take. For the month of November, I have 3 more days until I take a 10K plus payout from my funded futures. And on my top step accounts, I'm at 35K in payouts. So some of the biggest trades that happened in this week that we're going to go through, I was able to be a part of them. And I will show you my thought process as we're approaching those levels. And really, what I want you to get out of this is, yes, I'm going to focus on a couple things that I look for in an entry. But the second video that I make is going to be mainly on entry models. So if there's something that you're not understanding about how I'm entering, I will go through it a little bit, but I want you to focus more on, oh, it happened at this level. It was trading to this level. It was trading from this level. Because if you're trying to enter, but you're not entering at the area the market's likely to reverse from or continue from or have a big move from, even if your entry model showed up and you wonder why you keep getting stopped out, it's because you're not waiting for the market to reach the right location. Location matters. So let's go ahead and get into it. I'm going to make myself a lot smaller because this isn't about me. This is about the charts. So we're doing, like I said, November 17th through the 21st. So I have this daily profile drawn from 6 p.m. Eastern up to 9:29. I'm doing this on the 1 minute chart. The reason is because it's a lot easier to see the exact areas and things that I'm going through. Obviously, if you want to use a 5 minute footprint chart, I do that as well. As a matter of fact, it says I'm on the 5 minute. Let's go to the 1. Adjust it to how you want to trade. But for me, I think the 1 minute makes this very easy to see. Now, let's get into the settings very, very quickly, okay? So on deep charts price, I have as the stock, the base. That's just the candles printed. Deep trades. Now, the end of the week volume was very volatile. So I had the filter at 100, but for now, I'm going to have it at 60. Make sure it's on aggregate trades, filter max 0, filter min 60, and then everything else is stock except for the marker settings. Minimum size 6.20, maximum size 15. Okay. Imbalance tracker 400%. Everything else stock. If you need to go back and watch this because I'm going through it quick, that's okay. Shift candle. Everything on it, stock. I haven't changed a thing. Maybe I should. And I will keep adjusting it if I need to. I think this is just the volume profile. I'm 99% sure. Yeah, stock. Deep stats. Now, there is something changed on here. What you want to do is go to subgraphs, and you want to have it on text, and then you want to go to, delta volume, and you want to have delta volume on text. Pretty sure total NT or delta NT has text on it. You want to put those on ignore. You definitely want to put those on ignore, and then you want to go to delta percentage and then change that from ignore to text, because that gives you, on each candle that we see right here, total volume, the delta of the candle, and then the percentage of the candle being the delta. And that is the information that's going to be best for you. And then the cumulative candlestick, this is just the CBD stock. Haven't changed a thing on it. Now, obviously, I have a couple things turned off right now because it's going to clear up some things for you. Other things that I use, obviously, I need to adjust is the order flow bid ask down here. That's going to show you and we're going to look at this a lot. It's going to show you the footprint of each candle. I haven't really adjusted this yet. I will update you guys in the next video once I adjust this to my liking. But so far, I am just liking the basics of this. But I do think I'm going to make it a little bit cleaner. You can also see the volume profile of each candle. We'll go through that. Have not changed that at all. Daily volume profile, we will go through that as well. You want to have that and the weekly profile on. I have not changed anything there. Delta profile, don't need to change anything there. It's very good to see the delta profile. Profile values, which is VWAP and the deviation bands, that's stock. We're definitely going to keep these as references. And yeah, that's it. That's all the settings that I use, guys. Like I said, if I went through it too quick, just go back and look at these settings. That way you can use these, and we'll go through on how I use everything as well. So Sunday open to 929, right before market open, and we are using our levels with a volume profile. Now, we're not even going to focus on anything to the left of us, because there's a lot to the left of us on the higher time frame that would have given us a lot of clues of where the market's going to be drawn to as well. And we'll go through that in more videos, but right now I want you to literally get this and understand what I'm saying with the weekly profile. So we have this area right here, which is a high volume node. You can see there's a lot of high volume. There was a lot of agreement between buyers and sellers at this level. This is where the market spent the most time in this profile. Now, inside the area from this upper blue line to this lower blue line is called the value area, where the market considers this to be fair value, where buyers agree on this price and where sellers agree on this price. This is where 70% of the volume is transacted. The pink line is the POC. That is the single point where the most volume was transacted. Now, I don't pay too much attention to the POC as much as the area around it. I would rather have the entire high volume area than just the single tick. Because what if the difference between this being the POC and this being the POC is just one contract, right? They're still very significant. So you want to mark out the entire area, give yourself more room, have a better level to work with. And now also, we're going to focus on the value area lows and the value area highs and how they adjust over time. Now, I want to make this as simple as possible because I think people underestimate value areas and the importance of them. The reason that value areas are so important is because if this is where 70% of the volume is transacted inside the value area, meaning buyers and sellers agree on it, that means when the market comes outside the value area high, well, we already know that sellers agreed that this is a fair price because they were selling in here. It's the value area. They consider it to be fair value. Meaning, if it comes outside the value area high, if they thought this was a good price, sellers are going, oh, well, I mean, this is even better. This is even more of a premium. I would love to sell here. We already like this price. Now it's even more expensive for us to get to sell, right? And so on the flip side of that, buyers would say, oh, well, this was fair value, but this could be a little bit too expensive for me. Same thing on the downside. You could say, okay, buyers already, we know that they were agreeing on this price. This was the value area. Now, as it gets below, same thing. Buyers are going to be like, well, we already thought this was a pretty cheap price, and now we're below this area. okay, this is even, I mean, we got a sale. This is a sale for us. Let's double it down. This is really good price. And then to the flip side, sellers, you would assume they were saying, well, you know, this might be too cheap. I'm going to hold on to this until the market gets back to our area. So in that sense, if buyers agree on this price and they really want to buy here, and then sellers aren't really enjoying this price below the value area low, it would be safe to assume if buyers can find an edge and can all agree on this price and aggressively push the market up, it would make sense that we trade back into this high volume area or even up to the value area high. Because if this is a high volume node where the most volume was transacted, it means buyers and sellers agreed on it the most. So it makes sense that the market would want to go back there because it's a high volume area where buyers and sellers agreed upon. I don't want you to just know these levels as high volume node, low volume node, value area. I want you to understand why they're important, because I think understanding why is going to give you a lot more conviction in it. And it's not about what you know, but about how convicted you are in what you know. So a lot of people know order flow and strategies, but you need to understand the significance of these things. If this area was agreed upon, if this was an area that the market really liked to go to, it would make sense that it could revisit there, but we'd want to see us trade back into the value area. Now, what else do we know about this level? What do we know? If we're looking at the delta profile on the left, there is a significant, and I'm going to turn off price real quick so you can see what I'm seeing. There is a significant amount of selling volume here. So what could we deduce from that if we're going to take a long, if we were able to trade back into this area? Well, if we're going to trade back into here, which it's this high volume area where buyers and sellers agree upon, and there's a lot of selling activity that was here, it would make sense that if I'm longing, that would be an area that I want to target, because from this area up to even this buyer right here, and I drag it out, okay, there's a lot of volume, a lot of fair value, a lot of activity here. And so I'm going to put on the delta profile as well. Same thing that we see on the right. And what is significant about this level too? It is this area that we rejected from. It was previous support, we broke through it. Now we're resisting it. It is the point of control, high volume area. So that would be a very good target for us to go to if the market were to trade back into the value area. Now, we can't just take longs assuming the market's going to go back up here, because what if at market open, sellers just aggressively want to push the market down? Yeah. So then we got to find a way to get in with the sellers. We're just following the big activity, and then the volume profile would continue to develop. All these values would go down, and then yeah, we could target some lows if that was the case. But we have to see what happens at open. I'm just going off the overnight profile from Sunday to Monday open. So we're going to draw our volume profile. I'm going to put this on 8 speed. I think I can really walk through this pretty fast. And yeah, let's get into it. Let's get into open, what we're looking for. We know this is the area. This would be target 1. If the market were to trade back into here, we're going to see, do we accept into it or do we resist it and move lower? Or if we just open and dump, okay, shorts might have to be the play. Let's see what happens. Open. Pretty significant selling activity. You can see aggressive sellers sitting here. If I need to turn this up a little bit, I can. Okay, we have some significant buying volume come in. More significant buying volume coming in. Back up at that value area. Aggressive seller comes in. And we get a push up. Now, this is the first time that I am interested in wanting to take a trade. Now, I want to show you why. Let's break it down. If I drag this profile over here, we know on this first low, there was a lot of aggressive selling here, right? A lot of aggressive selling, and we can see it on the footprint as well. A lot of aggressive selling, but at this low, we had some buyers that flipped the profile and were able to push the market up. So all these sellers are now trapped. We can also see it on the volume profile. The point of control of these candles were very similar, but as buyers stepped in, now the point of control and the high volume area of these 1 minute candles are also pushing up as well. So another thing that we see, as we trade back into the value area, it is with a lot of aggressive buying. So buyers are willingly pushing the market up here. And on this next candle, what do we see? We have a lot of selling coming in, aggressive sellers trying to push the market back down, but buyers break through it. And so when we see this upper wick and I see there's sellers here, buyers here, I would want to see how the market reacts to this candle, because we could either trade back down through these buyers because we're right here at this value area, or if we push up past this buyer, clearly these sellers are trapped. And that's what we get, is a strong push up through this wick. Now, I want to break this down real quick before we go over the trade, because obviously this is a strong push, a strong acceptance back into the value area. So once again, we know our targets. This would be a very strong area for the market to go to. But why am I convicted in this trade? And I know I told you guys that it's not going to be an exact entry model video, but I do want this to make sense, and I just want you to be here with me and understand what I'm saying. If there's a lot of aggressive buying pushing through this value area after we trapped all of these sellers down here, and then we have an aggressive seller come in and we push up past it, what does that tell us? Well, one, it tells us if there's aggressive buyers hitting the ask, aggressive buyers are willingly pushing the market up. But what does the aggressive selling tell us? If there's a lot of aggressive selling and we push up, that tells us there are also passive buyers that are raising the market as well. So there's aggressive buyers raising the market, and now passive buyers are supporting the move as well. So we have full alignment between all the participants back in our value area after trapping these initial sellers. This to me is a pretty strong indication that the market is going to trade back to our level, because we know if this is our overnight target anyways, this is a clear sign to me that buyers are supporting the move, sellers are trapped again. Sellers are trapped again. So let's say we entered one contract here, and obviously I'm just using minis. If you guys need to adjust this to micros, if you need to adjust it to whatever size that you use, just understand what I'm doing, understand what I'm saying here, right? So actually I'm going to do 2 minis just for the sake, because I do size heavy. You saw it in my P&L, right? And so I'm doing this just so I can scale out as well. So let's mark out the overnight levels that we're looking at real quick when we're taking this long. We know this area right here, actually, wrong thing. This area right here is a significant area we've rejected, okay? That could be TP1. Where could TP2 be? Well, at this area where we know that there was a lot of selling activity, okay? And then if we wanted to hold a runner, where would that go? To the value area high, because we know that this is the range that buyers and sellers do agree upon. And if we were able to get through this aggressive seller, then this would be the last area that buyers are agreeing on this price and agreeing that this area is the fair value range. So these could be our 3 targets in this long. Now, where would you put your stop in this situation? Because a lot of people, if they're entering this longer, they wouldn't enter the long because they didn't bottom or top take it, right? For me, I'm going to get in with the momentum, and I'm going to get in where the market's most likely to go, and I'm willing to put risk on the table. That is how I trade. So like I said, adjust this to micros if you need to. But for me, I put risk on the table. That is how I trade. People see it every day. That's my strategy. So it would make sense that a lot of people would say, well, I need to put my stop all the way down here at the low of day. Well, if you have 2 minis on, that's a $5,000 stop. If you have 1 mini on, that's a $2,500 stop. 5 micros, you're still putting $1,200 on. So for me, the fact that we push through this value area with aggressive buying after trapping these sellers, and we have more sellers trapped on the way up, my stop would be under this area right here. Because this is the value area, since we've traded back into it, we know it's most likely not going to come back down here. Because now we're back in the value area. We're back in the range of fair value, right? It would make sense that the market doesn't come back down here because buyers found this price as a discount and sellers did not find this price enticing. That is why we have such a strong push back into the value area. Also on the push, we know trapped sellers were here, we know buyers are aggressive, and we know sellers are obviously getting cooked in this scenario as well. And all the bearish sell imbalance that were created pre-market have now officially been ran through. So maybe we put our stop at this area under this buyer that's protected us. under this value area. It gives us the best risk to reward. And if the market were to come back down here to this value area, not much is really stopping it from coming back down here anyways. So if we get stopped, worst case scenario, if it comes back down here and we see some other form of bull step in and it still looks bullish, we could just re-enter. But this way, we're putting our stop at the invalidation point of this trade idea, and we're risking the least amount of money as possible. Now, what's exciting about this? If we put our full TP up here, we're risking 1,500 to make 8,300. That's if the market were to get all the way up here. If we were to take profit off at this first target, we would still be getting a 2-to-1. And then if we were to put it at this seller right here, we are still getting about a 3R trade, which for me, 2.5 3R trades are what I live for. If you are able to consistently hit these, you are going to be profitable. There's no doubt about it. Okay, so you understand the trade idea. You understand why the stop is right here. You understand why full TP could be here and why we would take profit at these areas along the way, because these are the areas that the market could reverse on us. So let's go ahead and check this trade out. This buyer right here has defended. More aggressive selling comes in and we have a strong push up off of it. We would want to see it close above this. We get the close above. Okay, TP1 smacked right away. Right away. Because when you're trading with the momentum and you're using these value areas and you're using volume profiles to your advantage, you know where the market's most likely to be drawn to. We saw little to no drawdown on this trade. TP1 smacked. So there's a lot of different ways you can do this. And I could tell you what I would do, but come Sunday open, come Monday morning, when you're in the market and you're using this to your advantage, I can't sit there and tell you, hey, scale off here. Hey, go break even here. Hey, trail here. I like to go break even. That's how I trade. Some people don't like to go break even. Some people like to scale out. You got to do what's best for you and what you have the most success with. For me here, what I would do if I just have 2 contracts on is I would most likely, let's go to scale one off. I would scale one off. And then maybe I would adjust my stop up a little bit. I would put it below maybe this seller, because now I've already secured some profit and I know, hey, I can secure a little bit more if this trailing gets hit, and I'll put it below this seller right here that got trapped, right? I feel like for me, okay, that is a pretty solid strategy. I can still hold maybe the one runner. And like I said, adjust this to the micros that you use. If you use 5, 10, 15 micros, whatever it may be, scale accordingly. I'm just showing you the thought process. So, okay, we've clearly come up to this area where if we see a rejection from here and we don't see strong buying through this, yes, I don't want I want my stop to be protected. Also, we know that we're very close to this area where a lot of sellers came in the past. So for me, once the market gets up to this level, I want to trail pretty aggressively. I want to maybe take most of my position off. And we'll see how the market reacts if it gets up to this next level, or how it reacts to this area that we're at right now. We have a buy imbalance created, aggressive selling coming in. We would not want to see a close through this. We didn't get the close through it. That's good for us if we're in longs. Pushing through this level. These sellers are trapped. More aggressive selling comes in. A lot of aggressive selling coming in. Now, if I'm in a long here, I know we've already scaled some off. Do I leave my stop here? I see that there's a buy imbalance created up here at this high. And this is the first sign of bullish volume not being in our favor, because there's a lot of buying up here and we're moving away from it with a lot of selling. For me at this level, what I would say is I do not want to see a close below this level. So maybe I move my stop up even under this candle. Maybe we give it a little bit of room, breathing room. And remember, we entered at 85. The market's already up about 80 points. So you don't have to get a 300-400 point move, but this is where, okay, if it were to break back through here with all this aggressive selling and this failed buying at the high, ooh, yeah, this could be a prime area that the market reverses from. And it's our first level that we were expecting the market to reverse from. So it makes sense that there's some activity happening at this price. So we've trailed our stop up where we need to, and let's see how the market plays out. More aggressive selling coming in. We would not want to see it close through this level. We haven't got it yet. And we see a strong push up. We would want to see now a push through this high to confirm that this is going to continue going up, because as of now, these sellers that were aggressively trying to push the market down on this uptrend just got absolutely wrecked. The market has pushed up past them. There's obviously a lot more buying up here now. For me, what you could do is you could go, okay, now I want to move my stop up here under this low, because if it comes back down here, the chances of it being ran through are a lot higher. So maybe I want to adjust my stop here. Worst case scenario, with 1 mini, we're securing $1,100. That's a great day. Can't be mad about that. More selling coming in. Our stop was protected because we gave it a little bit of breathing room. More aggressive buying coming in. We would want to see it push this high. More buying at this high. It's edging our TP. It is edging our TP, guys. Bang. We'll call it TP2 hit. What I would do here, especially with 2 contracts, I would start trailing very aggressively, maybe on the 1 minute. That's how I like to trade, especially when I'm pretty well in profit. What did we see? We saw a buy imbalance created, and we saw 3 aggressive selling attempts into it. But that buy imbalance held in this uptrend. For me, in looking at this, and this isn't me showing you guys hindsight trading. You're watching this play out. This is what the market looked like when this was happening. This is the power of order flow. This is the power of deep charts. We saw 3 aggressive, strong selling attempts, and we were not able to break this level and saw buying push up out of it. For me, this is still a very strong bullish trend. Now, we did hit our level where there was a lot of aggressive selling. We know in the overnight, this is an area that we've rejected out of. For me, if my target is all the way up here and my stop was originally down here, I don't want to be in profit 120, 130 points and then come hit my stop for 40 or 50 points. That is not fun. I've noticed that a lot of greed, FOMO, and revenge trading happens with that. If I'm already well in profit and from our entry we're up, 140 points? I want to get the most out of it that I possibly can. We know that this is the high volume area. We know sellers are active here. So now we can see what the market does at this level. We would want to see strong buying push into it. We'd want to see aggressive buying push into it. And we're not seeing these aggressive buyers, these big trades push into it. Okay, now we have one. We have another strong push through it. Like I said, maybe here we're just trailing under every candle at this point. There's a huge buyer right here. Okay, I want him to protect. I want to secure $3,000. Whatever that price point is, it's a great trade. I know my last target's up here, but I'm not gonna hold my trade and then just know that it's gonna go up here when I can secure most of the position anyways, because these wins add up. More aggressive buying, and we're stopped. Great, we made 4,600 with 2 minis on this trade, and we saw very little drawdown, and it happened in the span of what, 15, 20 minutes? All because we understood volume profiles and the levels. Now, I'm gonna go through the rest of the day real quick, and I'm gonna go through it fast. What do we see is we came up to this area where there was a big fight between buyers and sellers, and we know the value area high is up here. So if buyers win in this level where there was a fight between buyers and sellers, there's really nothing stopping us from going up here. If sellers take control here, where would the market be likely to go to? Well, if sellers take control in this area that we've rejected out of before, would it not make sense that, okay, if sellers take control here again, buyers get trapped, we could see another push back down to this value area low, because we know if sellers win, that would be where the market's likely to go to. And we know that the low of day is down there as well. We know we've rejected here. We saw failed buying. This all depends on what happens here. If we break through it, great. Not much is stopping us from going up here, attacking these highs. We got to see at this area, this is a very key level. Who's going to win this fight? Who's going to win this battle? And I'm going to speed it up just a little bit so we can see it play out. We know right now there's a lot of aggressive buying at these upper wicks. Another attempt of trying to break through it. I want to see some strong volume from one side to really show me. But as of right now, these aggressive buyers are trapped. But we know there is a little bit of protection right here. Okay? Now we have, look at that. Now we have a sell imbalance created. Another trap buyer at the upper wick. And you're saying, yeah, that's cool, but where is it at? It's at our high volume area, and it's at the exact level where we know sellers are factored in the market. So we have it's not just the entry model, guys. It is the location of knowing that there's sellers factored here, and now we see them again. This is the first time that we've seen some selling rewarded if this candle were to close, and we see the failed buying to confirm it. Retesting the sell imbalance. More selling steps in. New sell imbalance created. More aggressive selling. New sell imbalance created. Strong push down. Where would it make sense for the market to go right now? This value area low. From the overnight. Some buying steps in. Okay, aggressive buyers are trying to push back up, I would assume to this level. Trying to reclaim. Failed buying on the way down. More selling comes in. More selling comes in. More sell imbalance is created. Buyers doing their best to step back in here. Doing their absolute best. Speed it up just a little bit more. Pretty sure we consolidate for a little bit. Sell imbalances ran through. More created. It would make sense we attack this low. You wouldn't want to see these ran through if you're in a short. They continue to defend. More failed buying. And we finally get the run through of them. Failed buying again at the highs. Aggressive selling steps back in. I want to see, do we take out this value area low? Come on. Come on, buddy. We do. Okay. Didn't remember if Monday we did, but it would make sense. Yes, we did. Sellers took control up here at this high volume area. Buyers obviously failed, and we did have some consolidation, but even at the end of the consolidation, you could see at the upper wicks, buyers were not able to fuel and move up, run through these imbalances. It took a little bit to play out, but then yes, we did come down here and attack this value area low after rejecting this high volume area. So this was Monday's price action. Obviously, I'm just showing you two setups where, okay, we can trade towards the fair value. Now that we have someone win here at this area, seller stepped in, we can trade back to outside the fair value area. You may have been in this trade for a while. You may have got stopped out, but you would have secured profit and your location was right. So now that we have Monday down, let's go on to Tuesday. And I'm telling you guys, this is going to be a long video, so you may have to break this up into parts. Okay. We are on Tuesday now. So let's mark out our new levels. I'm going to delete all of this stuff real quick. But I want you guys to understand from this video, location. The location. If that's all you get from this is location, that is what I want you to get. That is the main thing I want you to understand from this. So what do we get from this volume profile? This is the weekly cumulative from Sunday now to Tuesday pre-market. What do we have? We have our value area low here that we've accepted below. What do you mean, Jaron? What do you mean we've accepted below it? Well, we're below it right now and we're building volume and sustaining below it. We also tried to come up pre-market to break through it with aggressive buying and we failed. And it also makes sense because we know sellers are sitting at this level, which is the reason, why we sold off. It's not that hard, guys. It's very easy to be objective when you read order flow and have a good platform like D charts. Even if you guys don't know order flow, I feel like watching this, you're like, oh, well, yeah, duh. Yeah, exactly. There's sellers here. They tried to come up to this value area low after we built below it, tried to buy there, sold off. Like, it's not that hard, guys. You understand. Okay? And then also, this is a pretty significant area, high volume, we know, area, strong area, agreed upon. Here, agreed upon. Two interesting levels. So, what are we looking for here as the market's about to open? Well, we know there's a lot of sellers factored here. And another thing that we know is, well, if we come back up to this value area, it could act as resistance again, or if we break into it, okay, same thing that we did the day before. We can trade back up to here, we can trade back up to here, hopefully maybe have a final target up here. And then if we just end up selling off at open, okay, we gotta find a way to get in shorts. But we gotta be able to play scenarios. We don't have biases. We are able to just be objective and see what the market is doing at all of these levels. And that allows us to play either side. It allows us to trade with whoever's in control. It's not our job to predict. It's our job to respond to what is going on. So, and I want to do something else real quick. Now that we have a couple days of volume, we could put on a daily volume profile. Okay, daily volume profile. Here's the value area high. The value area high of this daily profile is lined up with the value area low of the weekly profile. And we're sitting in between the value area low and this high volume area. So yes, if we broke through the value area low of the daily profile, okay, we attack these lows. If we break through this level and break the high, okay, we could come up to the value area high of this profile, value area low of the weekly. You see how all these things align. That is what we want, is full alignment. And profile values. Okay, we have VWAP right here. We have deviation bands up here. Awesome. So we got our levels. We have alignment between our levels. Okay, VWAP and this high volume area, this significant volume area are aligned. Great, this is good for us. So let's see what the market does at open. Let me turn all this off. Okay, let's watch what happens. I'm gonna speed it, put it back on regular speed. Okay, now we have the 930 candle. Let's draw out the volume profile a little bit more if needed. Let's make sure the levels still all are the same. Yep, they are. Okay. Same with the daily. Same with the profile values. Awesome. Okay, let's see what happens. Let's see what happens. Because we want to be able to play either side. And we want significant volume to step in because that is what gives us confirmation. Strong push up. Once again, put on the profile values. This is right here at VWAP. Relatively close, not exactly, but relatively close to this area here as well. And I want to draw this out from this aggressive selling down to this aggressive selling. You could say that whole range right here. Right here. Where we rejected, that's an area of interest for the market to go to. Right now, this is looking very strong, very bullish. Interesting. Interesting, huh? It's crazy how it works. So, we get a push up exactly to this area where we rejected out of. It is the area where the value area low is after we've accepted below it on the weekly profile. It's this area we know sellers are factored in the market. And the moment that we come up to this level, we see a lot of aggressive buying attempts. A lot of aggressive buying attempts. But at the very top, there was a seller just waiting to get into this market. You can see it, right? We got the open, aggressive buying, push up through it. And then you can see that the buying dies out. You know, we go from 150, 190, 200 to 131. But who was sitting up here? A very aggressive seller that drove this candle down immediately from this level, which is our level. Not because we just draw lines on a chart, because we use our weekly profiles and we use volume profiles to show us these levels. These things are not a coincidence, guys. These aren't a coincidence. So once again, you say, well, would you enter shorts here? Is that your style? For me, I like to see if these buyers really are going to be trapped and that aggressive seller steps in. I would want to see more confirmation from sellers, maybe a imbalance ran through, maybe some more failed buying to really give it confirmation. Because that, to me, I'm willing to risk not top or bottom ticking for extra confirmation, because I will end up making more money in the long run if I do that. Clearly more failed buying again, right? Clearly a lot of failed buying at this area. And remember, profile values, this is right here at VWAP. Right at the value area high of the daily profile. Value area low of the weekly. Oh man, this is awesome. This is awesome. And we're patient. It's only 9:36. We're 5 minutes into market open. Okay, we got some more buying trying to come in. Are they going to be rewarded? Is the market going to reward these buyers? So, we have seen 1, 2, 3 instances where the buyers try to push this market up at the value area high of the daily, value area low of the weekly, VWAP, in an area that we've rejected from before, in the overnight, where we know sellers are standing. This isn't hindsight when we're looking at it like this, because I don't want you to memorize what I'm saying. I want you guys to understand what to look for at these levels. So if the market is going to push through a high, or it's going to sell through a low, it's not going to look like this, is it? We all know what a clear uptrend looks like. We all know what a clear downtrend looks like. When the market aggressively pushes through a high, it is aggressively. You don't have to guess. It just happens. It's so aggressive. You say, oh, I wish I would have got in it, right? This is not bullish. And if you're just looking at the candlestick chart, you may see that. But now looking at the order flow, and we see these are all aggressive buyers trying to come in, and they're still not being rewarded. And we can see it on the candle. We can see it on the volume profile of these candles. That the point of control of this range is down here at the lows, showing us that sellers are pushing this market down, and they're being rewarded much more than these buyers at the highs. Maybe here you take a short. Is this where you want to take the short? It's up to you to decide your entry model. Because for me, I could, but maybe I want to see a little bit more either failed buying or some actual initiation from sellers to step in. There's many ways that you can go about it, and if you wait for confirmation, you might lose a risk to reward based off of it. But for me, I don't think shorting here is a bad idea, especially considering we're below these profile values, below VWAP, not able to sustain up here, knowing sellers are there. But let's just see if the market does give us more entries, if it gives us more confirmation for us to be able to get into this trade. Because for now, you would want to see this ran through, truly, with aggressive selling. Because that would really confirm all the buyers that pushed up here are failing. And now what do we see? we have absorption at the highs. We have a buy imbalance where absolutely no reward from the buyers at this high. We have this buy imbalance ran through, and we have a sell imbalance created through this. Now, a lot of people would enter here and they would go short. Maybe put their stop up here, maybe have a wider stop. For me, it has been very important to know that the market will 99% of the time provide a retrace. And you feel like you missed the move a lot of the time. But if you just wait 5 to 10 more minutes, a lot of the time, the better trade actually ends up showing up. So we have these imbalances and we have this one. Maybe I want to see some kind of retest just to give myself a little bit more conviction. Because as of now, maybe these buyers here are still holding. And I just want to see the ultimate confirmation. Got more buying stepping in. Some selling at this level. Getting some buyers step in if they could close above it. It's looking pretty bearish at this point. Maybe we just want a retest of this level because we know this is where buyers are trapped. I mean, guys, when you see the order flow in real time, let's analyze this, right? Value area high of the daily, value area low of the weekly, failed buying at these highs where we know sellers are stepping in the past. Sellers step in yet again. Failed buying at every wick on the way down. Buy imbalance ran through. Failed buying. Selling rewarded. We have a retest to this imbalance area, a buy and sell imbalance. After we disrespected it, creating new sell imbalances, we push back up with one more push of aggressive buying at this high. A lot of aggressive buying at this high. And yet no reward. Sellers step back in. Sellers step back in here at this range. So we know these buyers are trapped. Maybe you want to wait for the 1 minute candle close. Right? So is this where you're going to enter? Very well could be. Let's go, like I said, 2 on. Remember, adjust this to micros however you need to. Do you put your stop here? Do you put your stop here? Maybe because you want to give it a little bit more breathing room, which there's nothing wrong with that, especially using lighter size. Remember, this is just minis for how I like to trade. Adjust it to your settings and what your risk tolerance is. Maybe you want to give it a little bit more room. You say we could come retest this one more time. Maybe you just want to put it above this buyer right here. We can do that. Risking 2,600, obviously with 2 minis, maybe we want to target a 2 to 1, 3 to 1. So we'd want to see like 7,500, something like that. Oh, we'll say 7,500 right here. Maybe this is our target for a 3 to 1, and then we can adjust as needed. We can adjust as needed. Maybe there's some external low down here. Maybe you just want to ride the trend if sellers can prove us that they're going to continue this market down. Because what we do know is, yes, there is this low over here from the overnight, but buying attempts are clearly not working. So this is an area where you'd want to get in with sellers because buyers, every attempt, the buyers try to push the market up. They are not being rewarded. Aggressive selling through this low. We would want to see this break. We'd want to see this, but we would want to see a close below it. We would not want to see the market here have a strong push up above, back to our area, back to our break even, and close above this range. You would not want to see that. What we do see, we would want to see is a close below this like that, right? So maybe here we say, I'm going to at least, maybe I scale one off. Maybe I scale one off and I go break even. And I just want to let this ride and trail my stop. And for all of you that don't do that, I advise you should do that. because when the market's very trendy and you have a fixed stop or a fixed take profit, and then the market hits your TP and then goes another 600 points, 500 points, 300 points, whatever it may be, that kind of sucks. And so get used to understanding that you can just trail, especially when the market's extremely trendy. Right now, this has the making of being very trendy because we see all the buying attempts fail. We see all selling attempts being rewarded. We did just scale at our first TP, and we're seeing more aggressive selling step into the market, confirming that this could be a pretty strong trend. Maybe we don't want to see it close back above this level. I would assume, for me, that is not what I would want to see to really confirm how strong this trend is I would want to see some push with aggressive selling away from here. We got more buying right here. Maybe we don't want to see it close above this because these buyers are now being trapped. Another strong push down. Maybe we now move our stop to this level. We're at least going to secure some profits. We're going to put it right here just to secure profit, have our stop protected, maybe give it a little bit of room to play out. If you're saying, but dude, I'm up 120 points, I want to trail it this aggressive. Hey, do it. Yeah, do your thing. Do your thing. Like, I respect that. I respect that a lot, actually. Maybe we just put our stop here. We look for the first sign of weakness, and then maybe we trail very aggressively. Weakness of sellers. Okay? It looks like some trapped sellers at this level. I wouldn't want to see it close above this. Buying stepped in, I would want to see the market close below that buyer. And we got to close below that buyer. Trapping that buyer. We would want to see it close below this. Do you see how easy this is to read, guys? You see how easy this is to read? Want to see sellers rewarded, want to see buyers fail. Sellers were rewarded, buying failed. Maybe now we move our stop above this high, right? Maybe now you're like, dude, I can't take it. I'm up 2,500 with 1 mini. I want to get out. Okay, do what you got to do. But I'm just showing you how you can confirm the trend of this market just by reading the order flow, and how using our volume profile shows us the levels that these trends are going to start. We would want to see this sell imbalance ran through and close below. And we got it. Hence why we get another drop, right? It's not rocket science. It's not hindsight. This is order flow, guys. This is how it works. Okay, now my trailing stop is at $3,000. How long can this go? Because obviously buying attempts are not working. Sellers are still being rewarded. This is great. We're calling our parents, telling them we're quitting our jobs. We just became millionaires because we use order flow. Mom, I started using value areas. Now I'm making a lot of money. It's great, guys. It's awesome. Still no significant volume coming in yet. Okay, here's a lot of buying that comes in. Is it going to be rewarded? A lot of selling coming in. If we close above it, we don't like that. Great. So now you see it. This is the first time sellers were put underwater and buyers were rewarded. We want to get out because that's the first sign that this market could reverse on us, right? The whole way down, buyers were failing and sellers were being, rewarded. This is the first time that sellers were disrespected and buyers were rewarded. It would make sense that the market pushes up a little bit here. Right. I know we do end up attacking these lows. Let me speed it up a little bit. We can just watch it play out. Because there is one more example from this day that I want to go through. Got it. So now we see failed buying at these highs, right? If it closed above that, wouldn't be much stopping us from attacking this high. More failed buying. 3 areas of failed buying. Also, at this time, and I think I've sped it up way too much, if we put on the daily volume profile, at this time when we came up here, it was the value area low of the daily profile. after we already had initiated and accepted below it. So we're below the value area low on the high time frame profile and on the daily profile. We try to buy back into it. Now we sell back below it, right? This is chop. We're fine. We're not revenge trading. We just made a lot of money. We took a good trade. We're chilling. Maybe we don't want to be a part of this. Is a battle. There's a fight. Buyers and sellers are absolutely duking it out here. Okay? Here we go. Another sign. Strong push below these lows. A lot of aggressive selling at this low. I mean, come on now, guys. You can see the absolute imbalance and force of aggressive selling that pushed through this low. Trapping these sellers at the low. I mean, look at the delta on this candle. First of all, look at the total volume on this candle. It's much greater than all the volume on these other candles. Look at the volume on every other candle and look at the volume on this one. Look at the delta. It's almost negative 1,000 on a 1 minute candle. Look at that compared to the rest of the candles. Look at the delta percentage. It is a negative 23%, while the rest of them are 7, 4, 0, 10. Okay, we got a 15 here too. But this is an obvious outlier. And I want to make this make a lot of sense. The reason we read order flow is to spot areas where the most significant volume comes in, because if it is an area where the most significant volume comes in, that means that there is the most interest at this level. This is where the big move can happen. This is where the most participation from buyers and sellers comes in. So what does this tell us? What does this tell us right here? There's a lot of aggressive selling pushing through, with selling at these lows, creating sell imbalances, and then we have a push through all these imbalances, creating buy imbalances. Well, what does this tell us, guys? It means that there is a lot of passive buyers here. And you say, well, how do you know there's passive buyers? Because the only way there can be aggressive sellers is if there is a passive buyer. There can only be 338 aggressive sellers if there's 338 passive buyers. So we can see this whole level that has been sold into, and immediately we see a bullish reaction out of it. Tells us there was a passive buyer sitting there absorbing all the aggressive selling, and then aggressive buying stepped in, disrespecting all these sellers, immediately trapping them. Immediately trapping them. I mean, it was instant. Now we're back at the value area low of the daily profile. Put on our values, okay? We also know this same significant level is right here at VWAP. Whatever happens here could decide, do we push back down and attack the lows, or do we push back up here to VWAP? What happens? We'll see. Because this is a very significant level. If you're looking for longs, you wouldn't want to see this buyer be closed below. Now, in this sense, there's a fight going on. Buyer at the high, seller at the low, right? Whichever side is closed above or closed below, in my opinion, would be, okay, this might hint at where the direction's going to be. Let's see if that plays out, because I wasn't even on the charts this day or at this time. We'd want to see a close above the high or a close below the low. Pushing below the low. Didn't get the close though. We did not get a close below this low. I'm telling you, of these two, whichever one closes above or below, I would assume that might be the direction. Just reading the basics of order flow. More imbalances coming in. There's a fight. Once again, battle going on here. Still nothing. Speed it up a little bit. Okay, we got to close above. Selling on the way down. Selling at the low. Of course we push up. Of course we push up. Because buyers won this fight and we came straight to VWAP. But it all started because this was the first sign that, okay, the most aggressive selling efforts came in and it was immediately disrespected. A reversal is going to happen fast and you don't have to guess it. Yes, there was a lot of activity in here too. You could have scalped. Well, there was buy imbalances created in here and sell imbalances were just yeah, cool. You got to trade off of it. Dope. You're getting it now. Awesome. Thank you. Oh, but Jaron, there's a lot of buying going on up here and the market's not moving up. And we see selling step in. Yeah, awesome. Dope. You caught a nice short. W. Congrats, bro. So you see now you're getting it. You're understanding. I'm just showing you a couple examples and you're seeing it. But it's not guesswork. This isn't, I'm not going to throw shade, but this isn't, back testing, just looking at the candles. You're actually seeing what the order flow looks like at these times and reading the volume and understanding the volume profiles and where it all originates from. That is the importance of this video. Once again, we will go heavier into entry models, but it all starts with this, guys. This is where it starts. Now, I'm an hour into this and we've only went through 2 days. I'm going to do one more day. Let's do one more day, okay? So, let me adjust this real quick. We're going to do Wednesday. Oh. Reset. Okay. Let's do Wednesday. Awesome. Let's erase our levels, because I'm assuming they will become relevant again later on. But I hope you guys are understanding this so far. You're understanding how to observe the order flow at our key levels, because that is where the market is likely to have reactions from, which is what we care about. Key areas. Okay, we're now going into Wednesday. What do we see? We have our value area low. We have our value area high. We have our high volume area, which at the moment we're below this value area, or of this high volume area. So let's draw out these levels. This is an interesting level. We know buyers and sellers fought it out here. If we were to not able to break back above it, okay, we could target this value area low. If we do break above it, okay, it would make sense that we come up to this value area high. So let's draw out this level. Okay. We just want to mark the levels because we know obviously there's buyers that find this price interesting because we continue to support out of it. And we know this is going to be the area that probably the most significant volume steps into. We saw we rejected out of it days before, had a lot of buying volume and selling. Sellers won this level. Even pre-market, it looks like buyers or sellers won this level again. If we look at the delta profile, we can see the same thing. But we are in an area where there's just a lot of buying and selling going on, and we want to see who wins. We're not going to guess. We're just going to watch, and we're going to react to what happens. Now let me make sure. Okay, cool. So also, what do? We are going to put on our daily volume profile. Okay, so of the daily profile, we are also sitting right here at this area where, okay, pre-market and in the overnight, there was obviously a lot of significant volume that happened here. Okay, we have our value area low of the daily. And we have our value area high of the daily. Also, if we put on the profile values. Oh, so the point of control, this high volume node and VWAP are all right here at open. So I am interested to see what the market does at this level. I'm very intrigued. What's the market going to do at this level? Because we're at the point of control. We're at a high volume area. We're kind of in a higher time frame, high volume area. And we're at VWAP. It's like, whichever way the market goes from here, this could be pretty interesting to me to decide where the direction of the day is going to go. But I'm not going to guess. I'm just going to respond and watch what happens and just be a part of it and not have a bias, because I am a good trader. We don't guess what the market does. We just read order flow because we're good traders, right? Right, guys? You feel me? Okay, so let's get into it. $9.29, $9.30. I just want to draw it out a little bit more just to make sure. You never know. I know, it's a 1 minute difference. It's my OCD acting up. My apologies. Yeah, cool. All the same. All the same levels. Fire. Dope. Got our levels, boys. Let's see what the market does at open. Looks right now like we have a lot of strong selling coming in. Not really seeing any aggressive orders yet, but it's also the first candle. So let's get into it. And we know, once again, sorry I keep pausing it, we know that we are right at the point of control in VWAP. So this is a very significant open. This is a very significant open, and we get to see, okay, who wins this? Who is going to win this? Buying steps in. You would not want to see that close below for longs. If you're short, you would. More buying comes in. Closes right there. You would, if this candle closes, it'd be very bearish. Still nothing strong. You'd want to see it close below the wick of the candle, and immediately we see a reaction out of it. Once again, VWAP, POC, and then the next candle we have a lot of strong bullish confirmation through it. But now this isn't bullish to me. There's nothing bullish about this. Now, here's the first area of significance. All this activity happened here at VWAP. It happened at the POC. We said if the market were to close below this candle right here, that would be probably bearish for us, because now we're closing below the high volume area. We're closing below these trap buyers. The very candle close, we get aggressive buying step in and alleviate these buyers here, and now buyers are back in profit. That is why we want to see the ultimate confirmation of at least, hear me out, a 1 minute candle close below the candle where the significant volume steps in. We didn't get that. We did not get that, and the market pushes up off of it. Now, where are we at? Of the daily volume profile, we are right at the value area high. So, we know the value area high of the higher time frames up here. We know the value area high of recent sessions is up here. How the market responds to this level could be very significant for the direction that we think the market's going to go. Right? Daily volume profile. This is the area. How the market responds to this level. Do buyers fail here? Sellers step in. Now we look to play shorts. Do buyers push through this? Then we could at least target maybe these highs. These highs. Target the value area high, right? Because we know the weekly profile gives us our location, but it all matters to how the market responds at these daily profiles. And so we're at this first level that is going to give us some confirmation of where the market's going to go. Let's see how it plays out. Buy imbalance created. That's a good sign for bulls. Now, this area right here, you would not want to see it close below here. Now some selling comes in. Okay. Nothing bearish about this yet. You would want to see it at least close through this level. We get a strong push through this inbound, but we didn't close at it, right? Do you guys see? Do you guys see this? You guys see this? We came down to this bullish imbalance, tried very, very aggressively to sell into it, and we were not able to break this level. If we even closed a couple ticks below it, I would have went, okay, trap buying, buy imbalance. These sellers took control and trapped them. However, it ended with a wick with a lot of aggressive selling here. You can see the delta on this candle and the delta percentage. But buyers still were able to hold this level because we did not close below it. We did not close below it yet. We haven't. So for me, there's nothing. This is a fight. I have to see who wins this battle. It's a battle at this key level that's going to dictate where the market's going to go. And we see a push off. Waiting. We closed at this area, trapped these sellers, held this buy imbalance, trapped these sellers, pushed through this buy imbalance, and aggressive buying comes in. Now, once again, for me, at this area, this was the retest that we could have got in. If we wanted ultimate confirmation, maybe this is where we get in. And so I want you guys to understand something. Once again, this is not the entry model video, but I'm wanting you to understand how to trade towards the direction. Because obviously the selling attempts were not rewarded, buying attempts are rewarded. So here, we put our stop down below this area. Maybe if we want to put it below this low, we could. I think it should go best under here. Like this. Now you're saying that's a relatively wide stop. Well, if our final target is the value area high of the weekly profile, this is a 5-to-1 risk to reward. So we like these odds. Maybe we take one off at these highs where we know buyers failed in the past, right? It's the edge of this high volume area. A lot of selling here, a lot of battle. This could be a good area for us to take profit at. But I want to be a part of this strong move after we have held VWAP. And let me just show this before we play this out. Selling, failed. Buying, held. Buying, rewarded. Holding, POC. Holding, VWAP. Holding and adjusting the value area high of the daily. Buyers were rewarded this whole way. Sellers were not. Let's play it out. Selling pushes up. This is what you want to see. This candle closes green and there was a lot of aggressive selling on it. What does that tell us? Yet again, there's passive buyers raising the bid, supporting this price. This is what you want to see in a bullish trend, meaning aggressive buyers and passive buyers are both trying to push the market up. Maybe you don't want to see a close below this, but we don't get that. And now that we're above the daily value area high, we broke above it, retested it, and now have a push up off of it, trapping these guys right here. You would want to see this candle close green. Candle closes green. You would want to see that candle. Look at the aggressive buying that steps in. You would want to see it close green. You would not want to see it close back below here. You would want to see it close green. And it closes green. Every time that aggressive buying steps in, the candle closes green. If there was aggressive buying that came in and the candle closes red or purple on my chart, then you would have to go, okay, well, this now looks like it may not be as strong as I want it to be. Where are we at? This first area where we know there's a lot of significant volume, or we're getting close to it. Maybe we consider this, we'll call this level right here, this value area high of the day before, target 1. And we could take profit there. But now that there's these two buy imbalances here, you would want to see this. You would not want to see a purple candle, a bearish candle close below it. And you would not want to see it close below these aggressive buyers. Aggressive selling comes in. Here could be the, like I said, here could be the first sign. If you see we close below these aggressive buyers, which not this one, and you do see this seller fail it, like it didn't close strong. But the point of what I was trying to say is we close below the buy imbalance and these buyers. Maybe this is the time that you go, okay, maybe I scale one off. Maybe I go break even, right? Maybe this doesn't look as strong as I wanted it to. Maybe I just go break even and take all risk off, right? Nothing wrong with that because you're already at 50 points. And so you go, you know what? If it comes back down here, I don't want to lose money after already being in a strong trend. And maybe I could just re-enter either side of whoever when the direction's more clear. But obviously we know on the open of the next candle, we did see a strong push up off. So you're saying, okay, maybe my stop is protected here. But you would want to see this continue to push with aggressive buying. Nothing significant yet. Nothing significant yet. We're shaking, we're sweating. We're like, oh, what's going to happen? I want to see strength here. We are getting a push up, reclaiming these buyers, reclaiming the buy imbalance. You're saying, please don't revisit this low. Please don't revisit this low. It tried. It's trying to. New buying balance created, and aggressive buying steps in off of it. You would want to see this candle close green. We're close to our TP1. TP1 smacked. TP1 smacked. So now we can move our stop here, right? Under this low. We can move our stop under this low on the attempt trying to push back down to this area. We had a buy imbalance created away from all these aggressive buyers and more aggressive buying fueling the move. So now what are we going to do? We can sell one. Great. We secured some profit. This is awesome. This is awesome. We're very happy to be a part of this trade. You think you got a late entry because you didn't bottom or top tick, but you knew by using volume profiles where the market's likely to go, because that is how the market moves. And if you go back and actually test this and you look at this on any day, any week, any time frame, this is where the market's drawn to and from. So we are now in profit. We're up. We're happy. Even with one contract, we're absolutely cooking. Even if you have 5 micros on, you're cooking because the volatility has been crazy lately, right? This is what we want to see. Aggressive buying, rewarded. Aggressive selling, failing. Let's play it out because our TP1 hit. More aggressive buying coming in. Closing green. More, I mean, nothing bearish about it yet, right? Maybe we can just keep our stop where it's at. More aggressive buying coming in. You would not want to see it close red. It didn't close red. Now we push this high. Maybe now we adjust our stop up to TP1. We say this could have been resistance, now support. However you want to look at it. But there's obvious aggressive buying all the way up and it's being rewarded. No sign of selling activity. More aggressive buying. You wouldn't want to see this close red. More aggressive buying. You wouldn't want to see it close red. It didn't. You would want to see these buy imbalances ran through. More aggressive buying. Closes red right at this level, but immediately get a reaction up off of it. Maybe now we're going, okay, let's adjust our stop up maybe a little bit. However we need. Secure, secure. Sell imbalance ran through, more aggressive buying. Once again, oh, I don't want to see this. I really don't want to see this candle turn red. I wouldn't want to see this close below. I definitely would not want to see this imbalance close below. And it wasn't. Maybe now I'm trailing very tight. I'm very scared and I want to secure my profits because that's how a lot of you guys are. But it's okay because when you read order flow, you get to remain objective and get to see what's exactly going on. More aggressive buying. Didn't close red. You wouldn't want to see this area close back below. Once again, a lot of aggressive buying at this high. You would not want to see this candle close red. It did. So maybe now you're going, okay, I'm up pretty good in profit. Maybe I move my stop up under this low. Like you're being very, very conservative at this point and you want to secure as much profit as you can. We're pretty close to the TP. Now I'm seeing buying at this upper wicks and the candles are starting to close red. Maybe now we're going to be a little bit more conservative, right? Nothing wrong with that. You're doing the right thing in this situation. Okay, and we're stopped. Great. We secured most of the profit. We were trailing pretty tight. Let's see what happens. Okay, more aggressive buying, but it does push the high. Okay, maybe we had our stop too tight. Great, we get to learn from this. We already made a lot of money on this trade, but if we want to make more money, we can learn to maybe trail more conservative in that sense. We did the right thing. I believe we did the right thing in this situation, but you know, we learn from these things. Every time you get stopped too tight, every time something like that happens, okay, I get to learn. But right now, we didn't close below. I should have had it looser just to see if there was going to be a close below it. And I want to analyze this real quick. We closed right at this imbalance yet again. If we would have closed below it, that would have been bearish. But the fact that it closed right there, just like the instance that we looked at earlier, nothing yet was bearish about this. You guys can see so objectively with order flow, these candles, it shows you the switch flip from bullish to bearish, and nothing yet, not a thing yet has been bearish. More aggressive buying. I mean, these bulls are strong. More aggressive buying. Pushing up. Man, our TP got hit. We trailed too tight. Dang it. Now, I think you all know what happens this week. That's not the point of what I'm trying to show you. Or today, after this area that we're at right now, I think you guys all know what happens. I think you all know, and we're going to look at it. But the point, my point here of this is that where was the market drawn to? The value area high on the weekly profile. That is the whole point of this video, is that you guys are using the weekly profile. Do you not see how every day that we went through, it goes to the value area high or the low, and it shows us at open through the daily profile, through VWAP, through the buyers or sellers rewarded, where the market is going. Many people would have said this is too high of a target. But we know with volume profiles, even if it would have reversed here at this area, we got something out of it, right? Now, that being said, I want to look at this real quick. We see this double distribution. And what does that mean, Jaron? What it means is you can see this whole area is a high volume node. We have this area of low volume. And then at this value area high to the high of this range, we kind of have another area of high volume. So the aggressive buying that it took to leave this area and to go into price discovery mode, to go to this value area high, the amount of buying it took, it will take the equal amount of buying to accept into this double distribution value area high for buyers to say this is still a price that is cheap enough for us to buy. Because we know at the value area high, sellers are now understanding this is a premium, buyers could consider this expensive. So it would take an overwhelming amount of aggressive buying to not only accept into the value area high, but this distribution level. So let's see what happens now that we have reached this spot, because if you're just looking at this, whoa, that's a lot of aggressive buying, isn't it? And let's just keep this level here just for reference. Let's keep it just for reference, guys. Let's speed it up a little bit. Okay, wait, actually, give me 1 sec. I know, which time is it? Nothing yet, and I'm gonna slow this down. The reason I paused is because nothing yet about this is bearish yet again, right? Yes, we have a lot of selling. Yes, this could be potentially failed buying, but we have not closed below this buy and bounce. Aggressive buyers may not be rewarded yet, but aggressive sellers aren't either. And I need to see aggressive sellers rewarded and aggressive buyers fail when we have already had a, what was this, a 300-400 point pump? Like, I need to see ultimate confirmation. Nothing about this yet is bearish. Because I know people were trying to short here. Which, yeah, it worked, but there wasn't the order flow to back it up. Yes, we were at our value area. Yes, we know it. Hit it to the tick. Yes, we know we have our levels. Our levels rock. We're the best. Order flow traders on top. I know. But if we really want to take good trades, nothing about this is bearish yet. Not a thing, guys. Once again, this level's still holding. Are you kidding me? There's nothing bearish about this. There's literally nothing bearish about this. And before you ask the question, let me answer it for you. You're saying, well then, Jaron, why are you not taking a long? Because of what I said earlier. First of all, we just had 300 or 400 point pump. Second, it is going to take the same amount of aggressive buying into this value area high and double distribution that it took to leave this area. Meaning, I cannot guess that buyers are going to accept up into this range. I need to see through initiation and acceptance that buyers are willingly pushing through this range. I need to see an initiation candle and a breakout with strength. So until I see that, we're just kind of in the middle ground, letting buyers and sellers fight it out. Who's going to win? You don't just guess. You let the order flow tell you. And what I just said better make a lot of sense to you, because if you don't understand that, you're not going to be a good trader. You need to see the initiation into these high volume areas and these value areas. You can't guess that it's going to happen. Yes, there's failed selling. But as of right now, buyers aren't showing us strength either. So you're guessing if you trade at this point. You're guessing. Still didn't close below this range. Still didn't close below it. I mean, dude, this level's crazy. Do you see this hold? Buyer, I mean, this is crazy, guys. It's still held. Nothing about this is bearish yet. Not a damn thing. Okay. There we go. Here we go. 1036 from open is the first sign of true aggression from sellers that we've seen all morning. This is the first candle. This is the first candle that we've seen where sellers are actually rewarded for their efforts. Trap buying, all these imbalances, but we actually got to close through with aggressive selling. So here's what we do. Do you short this and have a stop up here or up here to the high? Or do you wait for it to maybe retest these imbalances and then get in? That's up to you. I've been telling everybody in my mentorship as well that, hey, the market is going to retest. If you keep in your mind that 99% of the time there will be a retest, you're going to be a lot happier in your trading. Let me see if I eat my words. Let's see if we do get a retest or not. Now, this, to me, is the prime entry. Failed buying. Buyers held and supported so many times. Aggressive selling finally rewarded. We have the retest of the level that the buyers failed. With aggressive buying, analyze this candle. Do you see the buyers that tried to push up to this area after we broke through it? Tried to reclaim it. Sellers immediately stepped back in. We can see that the volume of the candles is progressively, the POC of each candle is progressively moving lower. This, to me, is the first candle that I go, okay, sellers being rewarded, buyers failing. They tried the retest with aggression and we closed back below it. First time that I've seen, okay, this could be the area that we get a small retrace. So, shorts, yep, love it. Where would we go? Stop here. Maybe we put our stop here. Maybe we put our stop here. Maybe we just want to be very more conservative about it, have a tighter stop, especially in this crazy range. Where are we going to target? Well, we know that we're at the higher time frame value area high, which is where we get reactions from any, I mean, do you see how perfect this guy's was? Do you understand this? Second, where do we target? Do we target low of day? Do we target POCs? Do we target this area? Do we target VWAP, value area low? You know? Where do we target? Maybe we just target the POC because we're like, hey, this trend was insanely strong and I don't want to have too low of a target because, or you can just trail aggressively like I do, right? I'm sped it up because we know what happens. we know what happens. We know what happens. And it kept going lower. It kept going lower. But do you see how the point of this video is to show you the levels, and through the buying and selling aggression, through the order flow, we're able to see where the market's going to head to and from, and how perfectly every day that it happened. By the way, I've only shown you Monday, Tuesday, Wednesday. Thursday and Friday did the same thing. Did the exact same thing. I would show it to you, but we're already an hour and 30 minutes in. So understand how you can use daily and weekly volume profiles to your advantage to know that the levels the market's going to go to. Then once it gets there, see the relationship between buyers and sellers, see the fight, see the battle. Don't guess who wins. Once there is a winner, wait for a retrace, get in with the winner, target higher time frame levels, because that's where the market's going to go, especially in today's volatility, right? I don't want you to watch this video and go, yeah, it's easy to see these levels in hindsight. No, I want you to understand what I'm saying and use these levels because they work on every day. This is how the market moves, guys. Daily profiles, weekly profiles. Seriously. Now, I promised you that I was going to show you my quant tower settings real quick, because if you don't have deep charts, it is still pretty good. So I'll pull that up very quick. Letting it connect. I hope you guys got excited. I hope you learned something from this. And like I said, there's going to be multiple parts to this series. We're going to go more in depth on entries, more examples, because that's how people learn. But I haven't done a long video, and I figured that is going to help you guys a lot. So hopefully you learned. Okay, let's go through my settings very quick. And I'm going to go through it fast. If you guys need to pause it, you can. Right click, volume analysis, settings, cluster. Make sure it's from type to imbalance. The imbalance ratio, I use 400% and 900%, especially in today's increased volatility. If you're trading Asia, if you're trading a lower liquidity, lower volume session, maybe you can put on 3% or 300%. But for a high volume New York session in Q, 4.0 and 9.0 give me the best levels by far. Now on the left profile, put on volume because it's going to give you the value areas. I put on today. You could do the current week. If you do the current week, that is going to give you the same levels that I was looking at on deep charts, right? So you get to use these things. Right profile, delta, do it today, because that is what we saw on the right side, and we saw, or on the left side of the volume profile was the delta. So now let's do current week or previous week. Yeah, cool. Now you get to see the delta like we saw as well. So you get to use these things on Quant Tower like I use on deep charts, and you're still going to be able to win with this, right? Lastly, power trades. You have to adjust it depending on volatility. If it's New York session, you might want to put it on 300, 400, 500. If it's in Asia or London, you may want to put it on 150, 200. Adjust it. If there's no candles that show the volume that you have, you might need to lower it. If every candle shows the volume that you have, hey, you might need to raise it. You want to see in the data that you're presented only the most significant candles, so you have to be able to adapt and adjust it as the day goes on to the volatility that is presented. Because if every candle has a power trade, and every candle is showing you significant volume, that's not important. So be able to adapt and adjust it depending on what the volatility and what asset you are trading. So that being said, guys, this is the end of video 1 of this series. Next video will actually be entry model, executions, trailing stop. Today was very, very basic in that sense, but really wanted to focus on the levels. So I'll get started on that next video very soon. And yeah, guys, that being said, next Friday, which is the 28th of November, I'm running a webinar at 5 p.m. Eastern, where I'm going to go over some more of the best trades that I've taken this month to make 50K this month. Like I showed you guys at the beginning of the video, 35K top step, 10 to 15K with my funded futures, 100K in the last 90 days, and go more into my setup as well. So if you guys want, on my Instagram, there is a register link. Actually, I'll just leave a link in this video. That way you guys can sign up for it. You'll get a lot of information from that as well. And I'll also plug my Discord. It's a free Discord. If you want premium, which is $49 a month, about to be $100 a month, that's where I live trade every day, do analysis. The sell-off that we had on Thursday, which we didn't go through on deep charts, but you guys know that it actually went exactly to our levels yet again, because it always does. You can go back and back test it. I called the top of it at 253 in my premium group, right? So these aren't things that I'm showing you in hindsight. These are things that I do in real time in front of people. But I just want you to get where these levels react from and how to get these levels. So yeah, that being said, that's the end of this video, guys, and I can't wait to see you in the next one.